Well, our City editor Mark Kleinman, who broke the story originally, says the deal will secure the future of steelmaking in South Wales, but there are still many unanswered questions.
This is actually a deal that's been years in the making, and as we've been reporting on Sky News for the last couple of weeks, it's only recently that it's come together in this form, with the government investing £500 million of taxpayers' money and Tata committing about £750 million of company funds. Now, it does secure the future of steelmaking in South Wales. Tata is saying that the transition to electric arc furnaces will mean that it is committed in the long term to Port Talbot. But there are some unanswered questions in the announcement we've just had, including whether Tata, under the terms of its agreement with the government, will be able to continue cutting jobs if it so chooses into the future, beyond the redundancies that are going to arise in the medium term from this agreement. We know that Tata Steel employs about 8,000 people in the UK. Roughly 3,000 of those jobs are going to disappear. And that's why we've had such contrasting political reaction to this story as it's developed over the last couple of weeks. You've got the business secretary there, Kemi Badenoch, calling it a historic agreement, and you've got her Labour shadow, Jonathan Reynolds, saying only the Tories could spend £500 million of taxpayers' money to make thousands of British workers redundant. This is going to be a debate which rages. There is another big British steel maker, British Steel as it's called, which is also in discussions with the government about a big subsidy package. So we are going to hear more about potential redundancies in the steel industry and more government financial commitments in the weeks ahead.
Now, thousands of car workers at the big three Detroit-based car makers, Ford, General Motors and Stellantis, have gone on strike in one of the industry's biggest pay disputes in decades. Some 12,700 members of the United Auto Workers Union joined picket lines in targeted stoppages at Michigan, Ohio and Missouri after the union failed to agree terms with the car makers. It's the first time that the union, which has some 389,000 members, has staged strikes at all three companies at once in its 88-year history. Well, joining me now is NBC correspondent Shaq Brewster, who's in Toledo in Ohio. Shaq, welcome to you. You're outside a Stellantis plant which normally produces the Jeep. Has production there come to a complete standstill?
Yes, a complete standstill, and that's the purpose of this strike. And when you listen to auto workers here, they're blocking off all of the entrances to this plant that makes and produces that popular Jeep. Look, here in Toledo, Ohio, you have about 6,000 workers, just under 6,000 workers who have walked off the job. And you have plants in 2 other states also targeted. You mentioned this is the first time that a United Auto Workers strike has impacted all 3 major American automakers at once. You have workers here saying that they want a fair contract and a strong contract, specifically those sticking points. They're asking for a 46% pay increase over the course of 4 years. They said they haven't gotten much of an increase for the past decade or so. They want better retirement plans. They want better work-life balance. So there are strong sticking points. Automakers pushing back, saying that their demands are not sustainable, and that contract expired at midnight. So that's when you saw workers at these 3 facilities, including this one, walk off the job.
Jack, obviously the UAW's got a very, very big and substantial fighting fund that it can pay workers on strike for a number of weeks. But what about the workers themselves behind you? How keen are they to stick it out and go out potentially for weeks on end?
Yeah, you know, I talked to them, I asked them that. They understand that, yes, strikes are hard. These workers are getting about $500 a week out of that big strike fund. That strike fund might be expanded a little bit because of this strategy that they're taking and only targeting 3 plants. So you have about 13,000 workers off the job instead of the full 146,000 workers in the overall union. But look, strikes are hard. They know that there'll be a lot of sacrifice. But when you talk to them, they say they're willing to tough it out as long as possible. For them, it's not just about the money or the retirement or the specific demands, but it's about the idea of fairness. They see wages for auto workers trailing the wage increases that you've seen from other sectors of the U.S. economy. They see their wages drastically trailing the increases that you've been seeing for the CEOs and the auto executives. So because of that, they say they want a fair strike. They want to be treated fairly, and they want to be treated with respect. And so many of them said that they're willing to stick it out. They're willing to make that sacrifice until they get what they believe is a fair contract.
Now, Shaq, the other sites where there are strikes currently is the Ford production site, which makes the Bronco. That's in Michigan. And then there's the GM pickup site in Missouri. Is the union targeting production of SUVs and pickups because they're the most profitable models?
Yeah, that's part of it for sure. Look, one thing that was unique, another thing I should say that's unique about this strike is that workers were surprised that their plant was actually targeted. There was no announcement, no sense or no idea of which plants would be targeted in the lead up to this strike. They got a call and they got notified about 10 o'clock last night, so 2 hours before the contract expired, and that's when they learned which plants would be targeted. And part of the strategy here is, yes, this is a big, it's assembly plant. For all three of the automakers, all three of the plants that have been targeted, you're looking at assembly plants. These are popular vehicles, especially here in the United States, ones that customers and consumers are going to be looking out for. So when you talk about the potential economic impact, well, the automakers say that they have some stockpile, that they've been able to shift things around to at least help mitigate the damage that could come. Without a doubt, these plants are going to cause impact and damage if there isn't a contract, and that's part of the negotiating leverage when you listen to the UAW president. He understands the impact that this can have. He understands the sacrifice that these auto workers are making, but that's why these plants were targeted. And by the way, there's a chance that you can see more plants being targeted in the next couple of days. This is something that's called the stand-up strike, so it may be 3 now, but it could be 6 or 9 once we get to next week, and that is the fear that not just auto workers and not automakers have, but the global economy, the U.S. economy. There's a fear of the impact those large-scale shutdowns could have on the U.S. economy here.
All right, Shaq, got to leave it there. Really good to see you this afternoon. Thank you. And we understand that President Biden is going to be speaking on the strikes by the United Auto Workers at some point in the very imminent future. We'll bring you those comments when we get them. In the meantime, some other business news stories for you now. And shares of Games Workshop have surged by as much as 11% today after the miniature wargaming company unexpectedly announced an extra dividend payment after it said trading during the last 3 months have been better than expected. The Nottingham-based business said sales in the 3 months to the 27th of August came in at £121 million. That was up 14% on the same period a year earlier. It said pre-tax profits for the quarter have been estimated £57 million, up 46% on a year ago. The company said the 50p a share dividend declared today was in line with its policy of distributing what it described as truly surplus cash. The US grocery delivery app Instacart has raised its proposed valuation in its forthcoming stock market flotation following the successful IPO yesterday of the British chip designer Arm Holdings. Well, shares of Arm rose by 8.2% on their debut, taking the company to a valuation of $65 billion, which has raised hopes that other planned IPOs will be similarly well received. Instacart, which is based in San Francisco and which is America's biggest grocery delivery company by sales, is now looking to raise up to $660 million, up from the previous $616 million, while its stock market valuation would be up to $10 billion. Now, this has been a tough year for global diamond producers. According to one widely followed index, prices have fallen by just under 14% since the beginning of the year, reflecting weaker demand from China and growing competition from lab-grown diamonds. Well, that was borne out by today's results from Petra Diamonds, the world's biggest independent diamond producer and owner of some of the world's most famous diamond mines, including the Cullinan mine in South Africa. Underlying earnings on an adjusted basis for the year to the end of June came in at $113.1 million, down 59% on the previous 12 months. I've been speaking to the chief executive, Richard Duffy, and began by asking him whether the fall in profits was entirely due to lower prices.
We also had the Williamson mine that was only operating for 5 months of the year. And as we reported at Cullinan mine, we had lower grade for the year as a result of some early waste ingress. And at Finch, we also saw our production down a little. The good news is that we have addressed and mitigated those issues. And what we're in a position now as Petra Diamonds to see around 1.3 million incremental carats of growth between now and financial year 26.
Obviously, there have been rolling power cuts in South Africa for many, many months now. How have you navigated your way through that?
In our case, we in a sense, fortunate in that we don't get cut or load shed. We do get curtailed, and we're required to reduce our power consumption at different levels of load shedding. Because we have excess capacity in our processing plants, we're able to throttle our plants back and continue to mine at 100%. And so we've been able to get through this with very little impact on our production.
Now, looking at your statement, you obviously expect diamond to remain relatively subdued in the near term. Why? What's informed that?
Look, I think the biggest impact on diamonds currently goes to global economic uncertainty. We've seen interest rates stay stubbornly higher for longer. China hasn't recovered as we had hoped. And so all of that has played into the subdued market. I think if you look at the more positive aspects, though, the luxury market has stayed robust and resilient through these trying times. And if you go back to the fundamentals around supply and demand, there is a structural supply deficit in the diamond market, which we expect will start to provide support in the medium to longer term. So there is a lot of short-term volatility in the diamond market. We've seen it before. We'll likely see it again. But I'm confident that we will get through this, and you'll start to see the support from this structural supply deficit.
Where is demand holding up, relatively speaking?
Demand for high-value goods has always been robust, so your special rare diamonds continue to hold their value. We're in the fortunate position of producing some of the world's most unique and rare diamonds, and that part of the market is certainly resilient. We've actually seen smaller size ranges also hold value. It's been more in the sort of 2 to 5, 5 to 10 carat ranges where we have seen some pressure on the market.
How much of a concern to you is lab-grown diamonds? I think it accounts for just under 10% of the market right now. Where do you see it growing to over time?
Look, lab-growns have been around for a while, and they'll be around for a while to come. So our view is that they can coexist quite comfortably alongside natural diamonds. They just occupy very different market segments. So lab-grown diamonds currently are priced at less. They've seen a 70 to 80% reduction in their pricing. So they're around 20 to 30% of natural diamonds in terms of how they're priced. And they are very different purchase propositions. So our natural diamonds are formed billions of years ago. They are a quirk of nature in a sense. We can't make them to order. They are rare, they are finite, and so they represent some permanency and some store of value. And they are quite significant in terms of gifting to celebrate life's significant moments. Whereas lab-growns provide an earlier entry to the market. They certainly make lab-grown diamonds are more accessible. And as a result, we think that they can happily coexist alongside natural diamonds. I don't think it's a competition to see who would win in the end. They represent different purchase propositions for different things.
Obviously, a lot of parts of the world are now precluded from buying Russian diamonds due to sanctions. How much of an opportunity is that for you?
Yeah, I think the Russian diamonds are typically the smaller size fractions. In our case at Petra, 20% of our goods, higher value, larger gem quality goods, generate 80% of the value. So that's unlikely to change. I think if sanctions are more effective in terms of Russian goods, you may see an impact in terms of pricing in the smaller size ranges. So it remains to be seen how that works through. But to date, I don't expect it to have a significant impact on us at Petra.
Still to come here on Business Live, we'll have a look at how the markets are going into the weekend. Don't go away.
enormous explosion that's just come down.
I'm Stuart Ramsey, and I'm Sky's chief correspondent.
You either live and recover, or you die.
I just took a shower above the clouds. You know why? Because this is the Emirates A380. Fly Emirates, fly better.
Well, equity markets in Europe have enjoyed a largely positive session to complete their best week in several months. There's the picture. Nearly all of the main continental European indices finishing in positive territory. That's on hopes that the European Central Bank has finished raising interest rates. There are some fallers, though, and a standout this afternoon is H&M, the world's second biggest fashion retailer, has fallen by more than 7% in Stockholm after it reported flat quarterly sales. The market was looking for growth of around 5%. Well, here in London, the FTSE 100 has also finished in positive territory. Earlier on today, it actually hit its best level since late May. That's been largely led by consumer stocks, the FTSE finishing 0.5% higher. In terms of percentages, the leading gainers were Burberry and the B&Q owner Kingfisher. Leading blue chip gainers there, both more than 1.75% or so to the good. Over on Wall Street, the main stock indices have opened to the downside. There's the Nasdaq right now. Investors starting to look ahead to next week's interest rate decision from the US Federal Reserve. Arm Holdings has been very, very interesting. Obviously, it had a great start to its life as a listed company. Yesterday, it was off 2% at the open, but I can tell you in the last few moments, it's popped into positive territory. It's currently 1.25% to the good right now. On the foreign exchange markets, the US dollar is on course for its 9th consecutive weekly gain against a basket of currencies. As you can see, it's currently ahead by just over 1/8 of 1% against the pound. Sterling off against the euro. Euro having a reasonable session. It's clawed back some of yesterday's losses, currently up 1/4 of 1% against the greenback. As for the oil price, that continues to hit fresh 10-month highs on expectation of growing demand from China. A barrel of Brent crude earlier today hit $94.63. That was a level last seen on the 16th of November last year. It's now currently changing hands at $93.78 a barrel, just over 1/10 of 1% higher. We've got a markets guest to speak to in a minute, but I'm just going to bring you a bit of breaking news that's reached us, which is that the convicted child killer, the nurse Lucy Letby, has formally filed a bid to challenge her conviction at the Court of Appeal. Officials have said we'll obviously have more on that throughout the evening here on Sky News. Back to the markets now, and joining me is Tineke Frike, the head of UK research at Waverton Investment Management. Tineke, great to see you. Let's start with Games Workshop. Quite a media-shy company. We can never get them on the programme, but they've let the numbers speak for themselves.
Yes, indeed. You know, expectations were high going into this trading statement, and they just beat it. You know, for those who don't know Games Workshop, they design figurines and games, and whenever there's a new release for a game, typically you have a bit of a sales pop. So they have this latest release, and I'm going to pronounce this wrong, Leviathan. It's done really well. So really good numbers. And this is just a great example of a UK company that is delivering what their customers want and grown from a small company in Nottingham to sell about 38% of their sales are in the US. And this is before the deal that they closed with Amazon. So we're going to have a TV show and a movie. So maybe more people who like the Warhammer games and, buy the figurines, buy the games, etc. It's a great story.
It really is, isn't it? Well, I mean, I mentioned earlier on that the UK's had its best week since, well, it's now back to levels last seen at the end of May. A lot of that is down to strength in the mining stocks, which in turn is down to data coming out of China.
Absolutely, and hooray, a little cheer for the UK market. It's been a long time coming. Yeah, so China in context, we were all quite optimistic at the start of the year when China opened from COVID restrictions. And to be honest, it's been very disappointing. So finally, we've seen some numbers, retail sales, but also industrial production, when the numbers for August were higher than that of July. So a little glimmer of hope. Sentiment is still pretty negative. The market really was looking for like a big bazooka stimulus from the Chinese government. And instead, what we've seen is sort of a piecemeal small interventions. But they may be working now. So we're seeing some improvement, and mining companies derive a lot of their sales from China. For iron ore that goes into steel, it's more than 50%. And we've also seen luxury companies up. So you mentioned Burberry earlier, but also LVMH and Kering, on China's recovery. Maybe there'll be even more buying of diamonds following the Petra Diamond interview.
Yes, you never know. Now, we referenced the car makers earlier on. It's quite interesting looking at their stock prices. GM are currently up, but Ford and Stellantis both lower.
Yeah, no, it's interesting. I mean, obviously, the US market is lower, so I think they probably outperform. They are less down, but this is going to be a while before we know what really happens. And I think at the moment the share pricing are telling us that maybe it's okay, but it's what we heard earlier in your program. This is only 9% of this union's workforce on strike, so it could really expand. And there's quite a gap. So they've rejected 20% salary increase. They want
I'm sorry,
20...
we're out of time. I do apologise. Lovely to see you again. Have a good weekend. Thank you.
Take care.
That's it from me. I'm back on Monday morning at 11:30. Hope very much to see you then. In the meantime, do stay tuned. Sally Lockwood is up next, hopefully with that statement from President Biden on the car disputes. Have a good weekend. Cheerio.